Hey everyone, this is Mark from Stocks and Cash. It's Thursday, March 22nd, 2018. Here with your market update. Going to talk about my holdings and then some potential trade setups for tomorrow. Lots to talk about, so I'm going to jump right in. Look at this bearish candle that we had today on the SPY. I mean, indicators were there. Yesterday it was very clear. If you see this vertical line from this candle here as we go down to the indicators, you can see that we were already looking bearish. We were already looking bearish on the MACD. Same with the RSI, although it was a little more neutral on the RSI, but MACD and Stokes were looking very bearish. Today we opened down, we came back and tested the 100 simple moving average, and we just came crashing down throughout the day. Let's zoom in really quickly on the 5-minute chart so we can just take a look at what happened here. This was the carnage. You can see that we opened down, we gapped down, we came back. This was the test of the 100 simple moving average, and then we kind of came down, tried to come back up, couldn't make it. We sort of started to make, you know, a lower high, sorry, a higher high and a lower high, sorry, a lower high and a higher low, another higher high, and then it just kind of broke down from here. We broke down at this level and we closed down at, well, 263.48. Now, truthfully, I don't see any end in sight with this until, when I say with this, I mean this downtrend, until we come back and test 253, which is the low on 2.9. You can see this was the kind of support candle I was looking at, the low of this candle. This low is on 3.2 at 264.82. We obviously clearly closed below that level, so you know, I just see that there's more downside coming. I don't think, I mean, certainly buying here would be crazy. This is clearly a falling knife. I'm not saying you definitely want a 100% short, but at the same time, going long at this point to me would be crazy until there's clear buyers coming in to end this downtrend. Again, I don't really see much end in sight on it. This was the last support level. We've broken it, and now I really do think we come back and at least try and test this 252.86 level. Now, if we zoom way out, you know, we did have these double bounces back here in 2015. This was one here, and another one, sorry, one in 2015 towards the end of the year, and then one earlier in the year in 2016. So, you know, it looks a little different, but, you know, maybe we come up, you know, we tested, tried to break out, we failed. Maybe we come back and test here and bounce and then move on our way bullishly. But I truly believe until we come down and test this level, or at least come close to it, that, you know, I just don't see us reversing back bullishly at this point. Let's take a look at the Qs. Qs also had a pretty ugly day, similar situation, except the Qs are, you know, are still above this level here, this support level at let's see, what is the level at? 161.96. We are in the support zone of the fibs based on this move, although since we broke out of it, I guess we should draw it like this. This is the, well, let me hang on one second. This is the last swing here. So certainly we can come down and just move that over so it's more clear. Certainly we can come down and test this level here, this first extension, and then the second extension is essentially the low of this big bearish candle here on the 8th. But again, similar to the SPY, and although the Qs are looking a little healthier, I do see us coming down and testing this low here on the 9th, which is around 150 or so on the Qs. Now, as I mentioned yesterday, the Qs do have some more support. There's this strong ascending trend line that has acted as support for a long while. You can see that it kind of bounced on, you know, this black candle, this bottom, it stopped on this ascending trend line essentially. I mean, I can move it down slightly to prove that, ever so slightly. Whoops. Oh, I didn't mean to do that. There we go. So you can see, you know, just a small little tweak and it bounced off of this trend line. You know, I think that's pretty clear based on these other candles. You know, it doesn't exactly have to touch, and now I'm even further above it now. But, you know, honestly, close enough. Close enough is okay in stock chart analysis. So, you know, again, I'm taking this swing here, this recent swing high. We've come back down and tested this level, so let's see if we continue on downwards from here. And again, I've already drawn out the potential targets here. Target 1, 158.29. Target 2, 153.73. And again, I think ultimately we even get lower than that and at least test this level at 2.9. Clearly, the indicators are bearish. Volume was pretty strong today, so I think there's more downside here. The 100 simple moving average could act as support. This ascending trend line could act as support, so we may not test it, but my gut tells me that we will. So let's see what happens there. Holdings. Let's take a look at Apple. Got into Apple today. Apple had a gravestone type candle today. Basically a sort of a spinning top. I bought some puts on Apple. They didn't work out. We filled this gap. I bought more puts, and things started to get pretty scary for me because we were continuing on through this 100 simple moving average and then the 55 EMA. So where did it actually bounce off of? Well, essentially the 55 EMA is where it got smacked down, and it continued on down from there. So let me show you where I purchased originally. Bought a couple of puts here around 11.15. So on this doji candle right here, I bought some puts. Now, typically I say, hey, you can buy them when you get a close below the low of this, you know, first 5-minute candle. Well, we got a close here on this 10.55 candle. I wasn't available at that point in time. When I was able to get some puts, I came in on this doji candle, which I thought was a good opportunity. We did come down a little bit, and then we bounced from here, and we started coming up. Now, you know, we've seen in volatile markets that we can have a rally intraday that usually hits a level and then it gets smacked down and it goes back bearish. So I was thinking that point would be when we fill this gap here. So the gap filled on this candle. I bought a couple or 3 more puts to try and offset my gains. My losses rather. We came back down, things were looking pretty good, and then we bounced. And at this point, at 13.25, I said, oh, we've pushed through our gap fill here. You know, above this gap fill, we've kind of pushed through that. It was looking strong, and I said, you know what, I'm going to get out of my puts. Now, because this move was so big, the low of this candle was 171.24, and the high was 171.95. So you had about a 70 or so cent move very rapidly for a 5-minute candle, and I put in my order, and it never, to sell my puts, and it never actually took. So I had written on stock twits at this point in time, hey, I'm out of my puts, because I put the order in and I thought it was going to get filled. It didn't, and it kept on going up. And at this point, I'm getting a little nervous. This is where it hit off the 55 EMA. That's the highest level I was willing to kind of hang on to these puts for. And then the rest of the day was just a solid and steady decline to the point where I actually made a decent amount of money, about 30% on my Apple puts. Now, I sold 3 of them. I'm still holding 2 more for tomorrow, and we'll see where the market goes. But I do think that there's more downside on Apple. If we take a look at this chart, at the very least, I think we fill this gap from 214. The high of this candle was 167.54. We're currently at 168.85. So we have about $1.50 or so left to hit this first target. If this fails, if this support level fails, certainly I could see us coming all the way back down to this wick around 150. I mean, there's really no support beyond there. So this is a critical support level for Apple. If it breaks through, like I said, I definitely see us coming back down and testing that 150 level. Moving on, Pepsi. So you can see Pepsi also had a spinning top type candle. Because it's at the bottom of a downtrend, I'm not too worried about it, although there's still a little concern. I'm up about 41% on the trade. It's looking pretty good, so I don't want to, I want to lock in my gains. So depending on what happens tomorrow, if we gap down and start pushing these lows, certainly I plan on getting out. Yes, there could be some more downside, but I would wait until we break this level here before I got in bearishly again. I mean, we've had 1, 2, 3, 4, 5, 6, 7 down candles in a row. Again, you could have 15 down candles in a row potentially, but or bearish candles, I should say. But I do think that we're getting really close to support here. We could bounce. I just feel comfortable locking in my profit and getting out of my puts around this level here, probably around the 107.50 level, assuming we reach it. Verizon, not much really happening there. I did get in. We are below this kind of breakdown level here, so I am looking at 45.50 as the first target, and then 42.96 as the second. We'll see what happens. I think if the market rolls over, there's certainly some more downside on Verizon. McDonald's, MCD. This was an end of day purchase. Now we are kind of sitting at this Fibonacci retracement level here, so might be a little bit of trouble, but you can see the indicators are starting to roll over. MACD hasn't crossed obviously, but it's looking like it wants to. If the overall market rolls over, there's some gaps to fill. Oh, is that a gap? Nope. I take it back. Not a gap there. What was the high on this candle? 154.61. The low, 154.84. So there is a small gap here. So perhaps we come down and fill this gap between these two candles. But I do think McDonald's is looking kind of weak after it failed to break out of the 55 EMA. It's below its exponential moving averages. Looks like it wants to come down further, maybe test down here at 146.96 potentially, but there is some fib retracement support levels here that it could hit, so let's be wary there. Now let's take a look at some potential trade setups for tomorrow. But before we do that, actually, RCL, I just want to point this one out. This is one that I pointed out yesterday. Again, I wasn't able to really pay attention in the morning, but look at this huge down candle. If you were able to get in today, you would have done very well. And where would you have gotten in? Let's see. I've zoomed out a little too far. Let's see. So the 930 was this candle here. If you had waited to get a close, you would have gotten in on this candle. And RCL just took off bearishly for the rest of the day, minus this little brief pause, but you still wouldn't have gotten out because you weren't even close to getting above the high of this candle. So RCL could have had a huge gain there. We opened up at, let's see, 124. We closed at 120. So I mean, you know, RCL lost about $4 today. Could have made a lot of money on this particular trade if you had gone short. So just something to point out. Not every trade's a winner, but this one definitely would have been. And now we're at a support level. If we break through here, there's certainly more downside on Royal Caribbean. Now let's take a look at some potential trade setups. And I guess you could get into Royal Caribbean, but I wouldn't do it until, again, there's confirmation below this breakdown level. So let's look at American Express. below all of its exponential averages. It's below this pivot point here on 3.2, and I just don't see any support for it until we get down to 87.58. We're currently at 91.41, so we have about $4 or so to move down and touch this level here. AXP is looking like a first 5-minute type trade, as long as the market doesn't open up really low and there's a huge gap down. But this particular trade to me is looking pretty good. A couple others. CVX. You could see that we're starting this little ascending trend here. We briefly, or well, maybe not briefly, but we slightly closed below this ascending trend line. It's a little risky, but you know where to put your stop, at the high of this candle here, for example. But we could at least come all the way back down and test this low of 107.92. If we break that level, then we could come down to 191, or approximately $92. Not wild about this trade, but if the markets roll over more, they've already started to roll over. I think this has a lot of downside. You can see the Stokes are looking bearish. MACD is looking like it's trying to roll over, and the RSI is starting to roll over as well. So definitely keep an eye on CVX. YELP. So YELP has pushed through this Fibonacci retracement level, although, you know what, I take it back. Now that I look at it, this level was violated here back in February. So let's see what the new fib levels look like. And you can see that we're actually not through them, but this is interesting, right? This 50% retracement level at around $42 intersects with the low of this candle, the low of this candle, low of these two candles. So this level here, 42, coincides with some support. So you could get in on the first 5-minute candle tomorrow, but just be wary that this could act as support potentially. If that level fails, then it looks like we could come back down and test this $37 zone here. So quite a bit of potential if you're willing to put in some, put some risk on the table. You could put your stop. I mean, unfortunately, where do you put your stop? It really has to be at the high of this candle, maybe even above this gap. So you're putting on a lot of risk for a move that may or may not happen if we get support here. So you could also play it like a 5-minute candle, and if we close below it, you get in. If it starts coming back up and you close above that first 5-minute candle, then the trade is done. That's one way to play it. You can see that the Stokes are bearish. MACD is bearish, and so is RSI. So certainly some more downside potentially in YELP. Let's take a look at Dish Network. They've been looking awful since July, so almost going on a year, at least 3 quarters. Just been this awful downtrend. We tried to recover here, wasn't meant to be, broke down further, and now we're below the low. We're making new 3-year lows. This is the last 3-year low at 39.04. We're obviously below it. Pretty strong candle, pretty good volume. I think Dish has more downside to it. So let's see where we could go in Dish. So I guess it depends where we say our move is. So we could say that this is our move, potentially. From here all the way down to here. We're almost at our first target of 36.64. Second target of 32.28. And that again assumes, that we've drawn our fibs correctly. I'm not abundantly confident in the way I've drawn these fibs, at least in terms for targets. Truly, I guess the way I was originally drawing it is probably the better way. Where this is the low, and then this is the recent swing high here, you know, now you're almost at your second target of 36.4. So, you know, the way that's been moving kind of comes down, bounces, rolls over a bit, down, bounces, down, bounces, down, bounce. You know, it's just kind of making a stair step down. So it might be risky to get in here. Maybe wait for the next staircase, the next bounce, and then go short again. But just something to consider on Dish. It looks weak. It looks like ultimately it's going to keep on going down. Just trying to find a target is a little challenging at the moment. And the last one I want to talk about is Tesla. So I talked yesterday or the day before that, you know, we've gotten dojis at this 310 level, and when you get the doji, it tends to start running up and getting back to this 360 level. Again, we had a doji here on the 12th, ran back up and hit the 360 level. Yesterday, we did not get a doji. We got this whitish candle. Not exactly a spinning top, but not the healthiest candle either because of this big long wick. And then today we had a similar looking candle, except it was a bearish candle. And now we've closed below this 310 support level. So I do think it's certainly possible for Tesla to keep rolling over. I think it's possible that we come down and test this 295 level. If we do, that's probably a good place for a bounce. But if we push through, well, there's a whole lot of nothingness down here. You know, your next support level looks like it's around 242, or if we go with these peaks here, you know, maybe 280 or so is your next support. So I'm not personally planning on getting into Tesla. I may, depends on what the early price action is tomorrow, but you know, it's an expensive stock. Options are expensive. It moves quickly. But let's look at this, at the indicators. Stokes are overbought. It can live there. MACD looks bearish. RSI looks bearish. So I do think there's some potentially more downside on Tesla. You know, you can see too, we put in a high here, put in a low, put in a a lower high, and now a lower low. Maybe we come in and put another lower high in and then push down to 294. I don't know, but it's just something to be aware of and keep an eye on. That about wraps it up for tonight. If anyone has any questions, please let me know. Otherwise, have a great night tonight. Good luck trading tomorrow and have a good weekend.